Hi everyone, welcome to my channel. My name is Eddie. This is my YouTube channel, and I'm a realtor in Windsor, Ontario. And I have had my Chinese YouTube channel for a long time, and I'm thinking of doing an English channel as well, just to have more of my local clients to grasp what's going on right now in the market and what I'm thinking about the market right now, and especially with the interest rate set to go up in a few months. What is my thought on this? And I will help you guys to go through a bunch of data to help you guys understand what you can do in this kind of circumstance, and about especially allocating your portfolio, your readjust your distributions on different sectors, including the stocks or the housing market, all those things. If you want, you can subscribe to my channel, and I will keep on uploading more and more videos, trying to focus on more tips or more information, more analysis as to the Windsor market as well as the Ontario or the whole national housing market. And I will do my best to give my advice to my valuable clients to help them make their own decisions. Alright, today we're going to focus on the topic about if the interest rate, which is set to increase next year, will affect our housing market in Canada. The biggest news in Canada, especially in the Canadian housing market, will be the central bank will start raising the key interest rate next year. It's expected to increase in March. Many people, including some of my clients, began to ask me a question constantly. What will happen to the housing market? Should I hurry to sell my house before the interest rate increases? So when I encounter this kind of question, I usually reply that if I am able to predict the market, then I should be sitting in a luxurious office in the Wall Street or Federal Reserve to give advice. Not to mention that many accomplished economists they make mistakes in predictions as well. So ordinary people like us should always respect the truth that the market is unpredictable. So with that being said, why am I taking the risk to talk about this? Because as a realtor or consultant who specializes in the real estate industry, I feel that my previous answers are indeed unhelpful. So I hope to share and analyze the information I have learned. Hopefully my clients can make their own decisions, their own judgments based on the historic performance and data analysis in accordance with their own financial circumstances. So first of all, let's take a look at the correlation between the interest rate and the average national housing market. The graph here shows a comparison of national residential housing price and the prime rate in Canada over the past 40 years. In a 2 years period from the beginning of 1980 to the end of 1981, the interest rate rose from 12.25 to 22.75. In just 2 years, the interest rate increased by nearly 10%. Despite the interest rate hikes, the residential average increased slightly. Next, from March 1987 to July 1990, the interest rate rose from 8.75 to 14.75 in 3.5 years. In the 7 years period from beginning of 2002 to the end of 2007, the interest rate went up from 3.75 to 6.25. So in these three interest rate rise cycles, the housing price has risen simultaneously with the rise in the interest rate. This not only shows that the trend of the housing price and the interest rate are not correlated, but also shows that the central bank's willingness to raise the interest rate is weakening, and the pace is also becoming slower. Therefore, those who hope that the interest rate hikes will drop the housing price may be disappointed again, as they have often been in the past. In addition, as the government's debt ratio continues to rise, the federal government itself is also very resistant to raise the interest rate. Therefore, this time's interest rate hike, judging by its feasibility and historic performance, will not be up to the same extent like any time before. So the housing price is not related to the interest rate. What is it related to then? Fundamentally, It's decided by the supply and demand in the market. The basic education we have all received since childhood tells us that in the free market, the relationship between the supply and demand determines the price of goods. So next, let's take a look at the economic report on the relationship between supply and demand in the current housing market in Canada, provided by the Scotiabank. This report in May this year showed that the Canada's housing to population ratio was 424 housing units per 1,000 people, ranking the last among all G7 countries. In order to catch up with the US, which is the second to last, Canada needs to build an additional 100,000 housing units to reach the same level as the United Kingdom, which is ranked the last third, needs 250,000 housing units to catch up with the average of G7 countries. An additional 1.8 million housing units need to be built. But in Canada, nearly 200,000 new homes are completed each year. What's making it even worse is that the housing to population ratio in Canada has been declining since 2016. Without the pandemic in 2020 that caused a significant reduction in new immigrants, the Canadian housing crisis in 2021 would have been much worse. However, this short-term balance has changed with the announcement of the latest immigration plan by the Ministry of Immigration. Starting from 2021, the number of new immigrants will exceed 400,000 each year, and it's basically an increase of 10,000 per year. In 2020, due to the decrease in the number of new immigrants, the weakening effect on the demand side in the housing market will be released with the new replenishment of more immigrants from 2021 to 2023. The frenzy in the housing market at the beginning of this year might actually be caused by the increasing new immigrants rather than the widely recognized sudden drop on the interest rate, because the interest rate has already dropped to the bottom in March 2020, yet the craziest time for the market did not happen until March 2021. Considering the number of new housing starts in early 2021, which has increased significantly, there will be more new home listings in early 2022. However, according to the current trend, the number of new housing starts will gradually return to the previous rate of close to 200,000 units per year. Meanwhile, the number of new immigrants have risen sharply after this year, from an average of 250,000 people per year in the last 20 years to 400,000 per year, which is a significant change as compared to the new housing supply, which also brings up a very new big challenge to the Canadian housing market today. So the continuously increasing immigrants welcomed by the federal government, coupled by the strict control of new housing construction by local governments, will make the supply and demand more intense. Local MPs need to maintain the trust of voters in their ridings, so they will be very resistant to increasing the density of urban areas, while the development of new areas in suburbs means a huge expense, which will be difficult for local governments, who are already heavily indebted. Therefore, the housing crisis requires the joint efforts from the local and the federal governments to put forward the constructive policies to help solve this issue. In fact, in the free market, in addition to the support of fundamentals, changes in the mood of participants will also have a very big impact on the price fluctuation, which is no stranger to a lot of stock investors. In the global investment market, the generally accepted opinion is that Chinese believe in real estate and Americans believe in the US stocks. So as Canadians in an environment where inflation continues to erode our savings, will they also have faith in a certain product? According to Stats Canada, 3/4 Canada's total national wealth in 2018 was allocated to real estate. And this year, with the skyrocketing real estate prices, the figure may even be bigger. According to a survey conducted by RBC in the early 2021, 4 out of 5 Canadians believe that buying a house is a good investment. Another large-scale survey conducted by the Royal LePage in the middle of this year also showed that 78% of baby boomers believe that real estate investment is a good investment. Therefore, it can be seen that regardless of whether or not they have been through the 2008 financial crisis or housing crash, most people in Canada have faith in real estate investment. However, the existence of faith may be a double-edged sword. When the market fluctuates within a range acceptable to everyone, the existence of faith will support the upward movement of housing price. But when the market breaks through the lower limit that everyone can tolerate, the collapse of faith may produce a systematic financial crisis leading to another crash. Below in the video description, I have put links where I obtained all the data and info, so feel free to verify any of them included in this video. This is the first episode. I am trying to cover all the information and analysis I have regarding the national level of housing market in Canada. The next video I will focus on the Windsor market. Hopefully this information is helpful to you and you can benefit from this and make your own decision. Alright, see you in next episode. Thank you guys for watching.